Hi, my name is Troy Emory, and we're going to talk today about the new tax changes in 2018. I've been in business now for 11 years, and we're going to get into the new tax changes that everyone's talking about these days.
When we talk about middle class, I struggle with this. What is middle class? Middle class means a lot of things to a lot of people. So when you say you're gonna help the middle class, I want some definitions. I want something that I can really put my hands on. What is the middle class? All right. And what I did was I did some research, and this is probably the best data I could find. CNN Money uh, says that the middle class is really based on where you live. Okay, so as you look here, I got the U.S. average here, 46,960 to 140. To be honest with you, I had a whole different perception of what the middle class is. If you ask me what the middle class is, I would have thought the middle class meant anywhere from $100,000 to about $300,000 to $400,000, right? But that is not the definition of middle class. And I'm saying this, and I'm taking my time to go through this because I want you to really see when people make certain claims that it's going to help the middle class. I want you to see exactly who they say they're targeting and who actually gets targeted. Okay, I think that's important. Now look here. Now I was shocked here at Washington, 44,438 to 132. I really thought Washington was going to be more like 400,000 or 500,000 on the high end. I don't know when they actually took this data, but I don't know anybody living in Washington D.C. right now making that kind of money and living well. I just don't know. So I don't know exactly where they took the data, but here's some key things. We live in Prince George's. We're here in Prince George's County, 48,000 to 143. Uh, Austin, you're a little bit on the high side. He's in Howard County. I don't know where everybody else lives, but he's in Howard County. He's at 216, 217. So you feel a little bit better about the middle class being a little higher. But household, household, household. Again, I don't know when this was actually taken. If you go to CNN Money, there's an app, and you just plug your county in, and these numbers will pop up for you. But it does not tell you when these things were taken. Okay, so this is the target. This is the target range. Just look here, 46,000 to 140. Right. Let's go to the next slide, and this is going to be the thing that's really revealing here. Now, this is a graph that yours truly put together. And what I did was I said, okay, let's just take a family of four, uh, man, woman, whatever, uh, two children, right? And let's just say, okay, let's just take their income coming from a little bit less than $50,000 all the way up to 450. And I want to compare, I want to change the numbers at each step going across. And I want to compare 2017 to 2018, right? And these lines here are very important because what do you think these lines represent? What do you think these lines represent? They represent the middle class. So as you look here, look at the benefit in the middle class compared to when you come out here to higher income people. You see the gap widening here, really narrow here. Okay? And I'm going to tell you some things that really have restricted the growth of this differential to the middle class. I'm going to touch on some of these things here. Because really, there is no way under the new tax code that it's really helping the middle class. And this is like most other tax reforms. Again, they say it helps the middle class, but in actuality, it does not help the middle class. The middle class actually pays for most of the tax in this country, right? So, so you know, when they say middle class, this is the one thing that I really disagree on here, right? There are some things that they're in the middle class. If they were really serious about helping the middle class, and I don't want to get on the soapbox, I don't want to just blame people, but there are certain things that they can really help the middle class on. Especially if you look here in Prince George's County, You got people who have had homes, they bought investment properties, and in 2008 they went under, right? And some of these people are still holding on to those properties, and they're still underwater, right? They might make a high amount of income. If you have rental properties, your losses are restricted at what number, Austin? At what number? You go through this every year. $150,000. If you make $150,000, your rental losses are limited. You have zilch when it comes to rental losses. $150,000. That's pretty low. And these people, they have these houses and they're upside down. They can't get rid of the houses because they're going to lose money. They hate to keep the houses because they got to keep throwing things in it, and they get bad renters. So they kind of stuck with these homes. Yes, sir.
Is that active or passive in landlord ownership?
Either way. Either way. There are certain exceptions. If you are a qualified real estate professional, you can deduct up to $25,000 of losses, even though your income is over $150,000. But if you're not a qualified real estate professional, you work a job in this area, in the DC area, you got people easily make $200,000, $300,000, $400,000. They got these rental properties, they got losses. It's nothing they can do with it. But it doesn't make a difference whether it's passive, whether it's you are a limited investor, whether you're an active investor. Doesn't make a difference. Good question. So there are certain things that they really want to help the middle class. They can help the middle class. You're going to see later on that there's a cap on the amount of home mortgages you can deduct, right? Well, I mean, a lot of people in Prince George's County, unfortunately, they bought homes at $1 million, 1.2 million, whatever. Still holding these high mortgages, but they're going to be limited to some of the mortgage interest that they can deduct. They might have refinanced. You're going to see later on that you're not going to be able to deduct that on your taxes if you refinance. So, there are certain things that can really help the middle class, but I don't think that really that was the aim. I mean, that was a marketing campaign to really get people on board, but I don't think they're really helping the middle class. And I'm not going to blame Republicans. I'm not going to blame Democrats. As I said, I'm not into that. But as you see here, this is not working. This is not going to work for the middle class. You're going to get some relief, but you're really not going to get the big bang that you're looking for. Now, you got to keep in mind, these people, as you go further out, these people own businesses. A lot of them own businesses. And as you're going to see later, the tax code is really set up for people who are very wealthy, who really own businesses, especially C Corps, because there's a flat tax on the C Corp. So these people, when you really think about some of the investments that these guys own, this disparity gets much, much bigger. Much, much bigger. So we'll touch on some of that a little bit later.
If you guys want to reach me, you can reach me at 301-474-1040, or you can email me at troy_emery@tdecpa.com, or go out to our website, www.tdecpa.com.